welcome to Looking at the Markets with David Moadel. Today is a very special day on Looking at the Markets. I've been very fortunate to get a few minutes with Mr. Charles Nenner, market expert, to say the least. Charles has been the talk of Wall Street. He's got a widely circulated newsletter and various services on charlesnenner.com. So we definitely want to check that out. Mr. Nenner has worked for Goldman Sachs. He's now one of the leading researchers of market cycles. And I'm going to ask him about this, but from what I understand, he may have in fact called the 2007 market top, and quite accurately, and he may have some predictions about 10 years later, 2017, the cycle that we're in now. So Mr. Nenner, first of all, thank you so much for joining me today.
You're welcome.
Excellent. All right. So just real quick, if you don't mind, I'd like to tap into your background. What is your background? How did you get started in finance?
Well, actually, I'm a medical doctor by profession, and I was doing research years ago when I was talking about the early 80s, about inflow of psychotic patients all over the world, and we tried to figure out if there were outside or not outside factors, and if at different places in the world, people become psychotic in masses at the same time, which they did. And
right.
Then we found the periods, and I made it into a cycle. So then we knew how many, every how many months and years it started. Now, we already knew from experience that if there's full moon, a lot of women give birth, pre-birth, very early. So you better make sure that you have double staff in the hospitals. Now, why that happens, nobody knows. So as a doctor, in contrast to an economist, I learned just to do what's good for people and not to figure out why, because you cannot figure out exactly why. Like the doctors, they don't figure out up to today why a full moon deals with the pre-birth. So then by coincidence, I saw a program at that time at CNBC about markets going up and down. I says, well, I don't really buy the reasons. Let's look into it. Maybe the same thing is possible. And we start building cycles. And at that time, the computers came on the market, so that made it much easier. And I have been proving for many years that things don't move at random. If you think anything moves at random, then you shouldn't watch my work, and then you should listen to the milkman and to the baker, because who knows what's going to happen. But if you believe that things don't move at random, that means everything is preordained, then you look at our work, and then very fast you become convinced that there's no free will in the markets. Maybe there's free will in private life, but once millions or billions of people are involved, it equalizes itself out, and there's no free will. So the only thing you have to calculate is what the non-free will of the people is at a certain moment.
Absolutely. My understanding is that you called the 2007 market top, amazingly, and it came to pass. That's exactly how it worked out. You tried to warn people. Maybe some people listened, maybe some people did not. What were the signs that you saw back then, and what signs do you see now 10 years later?
Well, if you would go to, there's a website, Charles Nenner Research Center, and you will go to CNBC 2006. I was there, the Dow was 10,000, and I said it will go from 10,000 to 14,300 before it crashes, and it will get there 27th of December. And then if you go on CNBC, the 27th of December, I'm there again. It's 14,300. It says, can it go higher? It says, no, everybody out. This is going to crash 30% down, a little bit up, 30% down. And then if you go to March 2009, you see at the low that we said, now you totally get invested to buy. It's not what you see, because if I can call a Dow from 10,000 to 14,300 on the exact day, it means that it has nothing to do with whatever happens in the world, because 1.5 years before we knew it already. So what I saw is, first of all, that a cycle top. And the other system I have is that if something moves up with a certain power, a certain momentum, then you can calculate in advance how high it will go. So it has not to do with results that come out or whatever happens in the economy. Let's say IBM goes up for 16 days. let's say a bounce of $16, then you know it will take, let's say, 8.5 months, and in the end it will go up $56. It's a pure science.
Absolutely. So I've read and seen calls on your part for Dow 5000, possibly in 2017. That's a bold prediction. What are the signs you're seeing right now?
No, that's not the exact prediction. The prediction is that the Dow will go to 5,000 starting the third quarter of this year, 2017, and will reach it by 2021.
Okay. Still, that's a big drop. And again, what are we seeing right now? Is it just because the markets are so toppy? Did they just go up too fast, too soon? Is it based on fundamentals, charts? What are we looking at?
Well, of course, I'm looking at cycles and price targets, but if we talk a little bit fundamental, I sent out a couple of days a chart on Q ratio. I don't know if you know what's Q ratio, because you want to know if a market is expensive or not. So usually what you look at is price earnings, price to book value, and price to cash.
Right.
The Q ratio calculates if you would replace everything in the market, what would the value be? And then you see that we're totally at the top of the range if you take out the year 2000. That means it's for the last 200 years, it hasn't become higher than it is now, which means you're totally at a total valued market over here. Now, if you want to gamble that maybe this time is different, we usually don't do that. We usually say as long as it's not proven it's different, everything will continue like it is the last couple of 100 years. Now, one thing that was the problem with the market is that people have nowhere to get any returns, so they buy the stock market. Now, at the highs, we get out of the bond market because I didn't understand why people with a 10-year note of below 150 would buy 10-year notes, because they know it's not going to stay there, and they know we're going to have some inflation, so for sure they're going to lose money. And on top of that, they were investing in bond funds, which means is if you buy a bond, you always get back your original amount. But if you're in a bond fund and then you sell out, you have a big loss. Now, what happened was, for 30 years, I've been in a rally in a bond market, and all that people know is bonds always go up. And when it came down, he says, well, it's temporary, it will not continue this and this. But if you look at charts of the last 200-300 years, you see that for the next 30 years, rates on bonds go up and inflation starts going up. Not immediately, but there is a cycle, maybe people know, a Kondratiev cycle of 60 years. And if you want to look back, every 30 years, there's a top in interest rates, and 30 years later, there's a bottom in interest rates. So everything is very scientific, and there's no hanky-panky, and people should really try and study what happened in the past. But again, only if you're convinced that things continue the way it was before. If you think anything can happen, then it's not worth to study the whole history of financial markets.
Absolutely. You also predicted the continuing bear market in crude oil going down from over $100 a barrel down to 27. I remember when that happened. Now it's hovering around a little bit below 50. What do you predict for the crude market right now?
We're looking for a bounce. We have a cycle low around here, so we can have a bounce. But I don't expect much to. So short stocks, we discovered them now because the crude is projecting a cycle low. But I think all stocks have to go much more on the downside, as do bank stocks at the moment.
Absolutely. I'm looking at charlesnenner.com right now, the Charles Nenner Research Center. I will put that link up both on the video as well as in the description of the video. Fantastic website. I'm seeing Charles Nenner TV, radio, articles. What types of services do you offer to people who want to tap into your wisdom and insight?
Well, it started out with I was managing the director of Goldman Sachs for a long time, and then I started my own firm. So, of course, the big institutions are the big clients and the banks. But a lot of wealthy clients also wanted the research. So the basic research is coming out 4 times a week. On Sunday, you get printouts of what I see in the computer. You don't have to take my word for it. And then if people have a special request, let's say you believe IBM will be good, but you don't know when to buy IBM because you can be right, but maybe you have to wait half a year until it goes up. So then you can ask us to build a cycle of IBM. We make it especially for you. That's a little bit more money, but the basic system is 4 times a week. We send you newsletter with printouts of the computer in S&P, European markets, all the currencies. That means the euro, Australian dollar, the yen, the German bunds, the American bonds, the gold, the silver, crude oil, natural gas, whatever you want. It's all there.
Fantastic. And if everybody listening to this has not visited the Charles Nenner Research Center, I certainly encourage them to do that. And is it true that there's also a free trial at the website?
There's always a free trial for a while because it really proves itself. We want people to try it and see if they like it. So, of course, there's a free trial.
That's fantastic. I don't see why anybody would choose not to take advantage of that. Just another question, if I may, just to tap into your predictive prowess. I totally agree that at some point this toppy market has to come down. I'm looking into gold, silver, other commodities. Do you recommend physical gold and silver, or perhaps ETFs such as GLD, SLV, anything like that?
Well, that depends. I have friends who have physical gold because they're part of that conspiracy theory that markets are going to crash and the government can stop your bank accounts or whatever. I don't think it's going to go that far. So that's a complicated situation to have gold or gold coins. So then you can go to the ETFs, GLD, and play the gold. Now, we are long gold at the moment. Right now I see gold is trading at 12.51. We need to close $1 or $2 higher to get a projection to $1,300. So for the moment we're positive on gold, but around 1,300, 1,305, we're taking profit.
Very good, sir. So to wrap it up, long gold, short crude oil. Am I right?
Yeah, and long euro. We think that the dollar is going to be weaker, and we're long bonds at the moment for a bounce. I don't think we've seen the low, but for a bounce, we're long on the bonds. What else can I tell you? And we just covered the short position on crude.
Very good. Bonds for a short to medium term trade sounds like what we're talking about here.
Yeah. Correct.
Very good, sir. Very good, sir. I know you're a busy man. I know the markets are still going on, although it's not much movement right now. If people wanted to reach you besides the website, or is the website the best way to reach you? Are there any other ways to reach you if people want to learn more?
Yeah, they can leave a message on the website, and the firm will send it to me, and then we'll contact.
Very good, sir. So we got some actionable advice today from a very accurate and insightful market predictor. Fantastic. Mr. Charles Nenner, thank you so much. I hope everybody takes advantage of your wisdom and insight, and I really appreciate all of your time today.
You're welcome. Just one caveat. If you don't look at the research, please remember my words. By the third quarter of this year, you have to be out of the market.
Third quarter of this year, quarter 3, 2017. You heard it here, maybe not first, maybe second or third, but you heard it here from the man himself, Mr. Charles Nenner. Get out before you get hurt. Thank you, sir. I really appreciate your time today so much.
You're welcome. Bye-bye.